You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.
Join us now for the expert source for inside information on the options markets. It's time for Options Insider Radio with your host, Mark Longo.
Welcome back to Options Insider Radio, the interview program here on the old network where we welcome on guests from throughout the world of options and derivatives and sometimes beyond and proceed to pick their brains for the benefit of you, the listener. My name is Mark Longo from the optionsinsider.com, as well as, of course, from the ever-exciting, at least we hope so, Options Insider Radio Network. If I sound a little bit different, because I'm coming to you not from our studio in Chicago, no, but from scenic and indeed quite sunny Washington, D.C. for the Securities Traders Association Market Structure Conference. Say that 5 times fast. I dare you. And, of course, we're at a conference. That means a slew of great guests for you guys to listen to and learn from. Next up is a newcomer to the program, indeed to the network. He is Glenn Lesko, the Chief Growth Officer over there at Dash Financial. Glenn, welcome to the program.
Thank you very much. It's great to be here.
And Glenn, as we are wont to do with all of our first-timers here, why don't you go ahead and give our audience a little bit of an overview of your background in the space and how you found your way to Dash.
Yeah, so I've been involved in the institutional equities business originally. So I got into the business in 1990, and I worked in various investment banks in global equity trading. I was fortunate enough to move into the electronic side of the business around mid-2000 decade. I was in Instinet for 10 years, where I had positions both in the U.S., in Asia, and then back to the U.S. And when I came back to the U.S. at Instinet, I also then was in charge of our options business as well. After Instinet, I went over to Bloomberg Tradebook, an agency broker, and there I ran a multi-asset platform that included equities, options, fixed income, and futures. So that was my original background, and I've really been focused on institutional electronic trading across a few different asset classes over the last 5 or 6 years.
And what lured you to the dark side of Dash, sir?
So I also have a client testimonial. So while working at Bloomberg Tradebook, I needed to find a partner to outsource some technology solutions that we had previously insourced. So I met Peter Maragos and David Carrot at that time, and they rebuilt some strategies that I had used for both equities and options at Tradebook, and they did a really fantastic job. As we like to call ourselves, really craftsmen. They not only rebuilt the technologies in the way that I had, our team had built them, but I think they made them even better and gave a lot of feedback, and I really appreciated the way they did business. So I decided later on to do some advisory work for Dash, and then I came on full-time a little bit more than a year ago.
Glenn, I have to admit that I do like the title, Chief Growth Officer. I don't get a lot of people coming through with such optimistic titles, so you get points for a fun title there, Glenn.
I have to live up to it every day.
That's true. It's also a burden, a challenge for you as well. A little bit of a goal setting. I like that. But it's been a little bit since we've had a chance to chat with Dash here on the network. So let's start there. Maybe catch us up. I think it's been since about maybe OIC even of last year that we've really had a chance to sit down and chat with Dash. So it's been a while. It's been a bit over a year. Catch us up. What are some of the hot things burning up your plate there as the Chief Growth Officer at Dash these days?
Thanks. So there's been a really few exciting developments since then. I think first and foremost on the option side, we've continued to grow our presence in the institutional business, which is really our core. So both directly to funds, but more particularly to the large banks and brokers that cover the funds. And we've built out some new algorithms on that side. We have a suite of volatility algos, and we've also built upon our sensor brand, a new algo called Sensor Improve, which helps people walk up the spread. So there's been a lot of work on our core electronic trading platform. We've also been working on our Blaze EMS and Broker Point network. I think the industry is facing adherence to CAT next year, so we've done a lot of work to continue to help our clients handle regulatory challenges and requirements such as the CAT. And we've been trying to grow into new business segments and asset classes. So we've bought a company, probably something that you might know. So we bought a company called eRoom. We had really, again, always been focused on the big institutional market. eRoom has given us the ability to cater to what we call the professional trader and emerging hedge fund market. So eRoom is run by two fantastic guys, Colin Carrico and Ben Schwartz. They've now been incorporated to Dash as Dash Prime. They provide clients both with an introduction to Prime services, but also to numerous internal and external technologies as well. So it's really a one-stop shopping for everything that a trader needs. And now these clients also have access to Dash's electronic trading product as well. So that's one really exciting thing that's happened in the meantime as well. We've continued to grow our presence in the retail side of the marketplace through our consolidator product, which enables us to increase our share of the options trading. And I'm happy to say at this point, between 15 to 16% of the OCC volume trades through Dash every day, and with our Blaze product and our Broker Point product, another 30% we touch every day. So we've been growing in terms of our relevance in the options markets, and in order to do so, we've continued to build our products. Another area we've been focused on is our equities business. So we've been in the equities business since inception, and obviously a lot of the options that we trade are equity options, so it's only logical to do so. So in addition to hedging people's deltas, we have an equity-specific product. So we've also built a program trading product. We've built a dark aggregator product, which helps our clients optimize all the different dark execution pools that are out there. So we've been hard at work building new solutions for our clients and trying to grow our client base.
So not much happening since the last time I checked in with you guys. It sounds like you've been pretty quiet. I'm trying to think. I think that last time actually might have been when we had Peter on our trading technology show, where we talked about smart routers. That might have been the last time we had a chance to catch up with you guys, which is over a year ago. So it has been quite some time. I want to touch on what you just mentioned really briefly, because it seems like everyone at this conference in particular, this is an equity market structure conference, but everyone we've had in here so far, I don't care what they do, what side of the business they're on. It could be futures, could be something else. Everyone's all of a sudden obsessed with retail brokerage. It's the talk of everyone right now. Of course, there's been some big developments in that just in the last 24 hours, of course, over there. You guys, you're going for a little bit different clientele, I think it's fair to say, than some of these retail brokers out there. But still, it's a lot of interest out there in this side of the space. You guys have made some acquisitions in the brokerage end of the space. What are your thoughts on, shall we say, the pricing movements we've seen of late in that aggressive bleeding end of the retail brokerage side these days?
Well, we're not directly involved in it, but in studying it and analyzing it, to me, I think the wealth management community is really focused on gathering assets. So those people focused on retail, focused on wealth management, there's a lot of competition to gather assets, and there's a lot of competition to appeal to the younger investor, to get the millennial generation interested in investing. And I think if you look at new competitors like Robinhood, and you think that the trend certainly has been, low pricing in order to bring in assets, and it's kind of changed the nature of how these guys monetize their businesses. But certainly the commission element is really disappearing in the retail sphere.
I'd imagine you mentioned some of those volatility-oriented algos. I have to imagine that's probably been a pretty hot area for you guys, like even just this past week. Once again, we've seen the dramatic resurgence of volatility. Will it persist? Who knows? That's a question everyone continues to ask us whenever we see those spikes. Is it here to stay, or is it just another blip? I have to imagine that side of your business has been a little bit interesting of late.
Well, we like to say volatility remains volatile. But, I was talking to someone earlier today, and look, 18 and 19 have been very different. I mean, 18 we really saw, especially in certain months, a really substantial uptick in volatility, which it creates activity. It creates more options volume. This year, it's not been quite the same as 18, but still, we've had our fits and starts. We've had some lately. We have, various political things, presidential tweets, whatever you have, and volatility is still at pretty low levels. So I think for the longer term health of the options business, I think one of the real positive trends is that in this low interest rate and low volatility overall environment that we're in, people really need to find new ways to find alpha. And whether that's retail investors trading more options, or whether that's institutional investors using option strategies to enhance their yield or to monetize positions that they have, long-term positions that they have, we're certainly seeing people much more proactively looking at ways to outperform their peers and to drive alpha. And I think options have been a big part of that.
Obviously, we're here at a equity market structure conference, so outside of the big conversation about brokerage and everything else, there's a lot of deep in the weeds conversations about equity market structure as well. What is it in particular that brings you here this year? Is there a particular issue, or are you kind of just looking to catch up on what's the latest and greatest? What brings you to STA this year?
Well, we're market structure experts, really, in a way. And when Peter came on, he talked a little bit about smart order routing. And really, smart order routing is helping our clients optimize the market structure. So we have an order, and they're trying to achieve a result. They want to get a good fill. They may want to get a low explicit price, take advantage of rebates, whatever it is the client is trying to do. We provide a solution to get them the best outcome as they define it. So it's really incumbent upon us, and I'm not the only person here from Dash. We have a big team here. We're market structure experts, so we need to be here. It gives us an opportunity to learn the market structure. Sure, it gives us an opportunity to inform the decisions about market structure, but no one participant can get everything they want. But we're here to learn. We're here to talk to other people in the marketplace, and we're here to ensure that we are our client's window into market structure and to make sure that we have a high standard of expertise.
Obviously, a lot of your background is on the electronic side. That's where a lot of Dash hangs its hat. But you also have acquired other elements in the past, like some of the legacy liquid point assets coming in, which give you a floor execution component and everything else. How's that portion of the business doing these days? And obviously, there's been some changes. We had the CBO folks in here not too long ago talking about migrating all of that to the old floor over there on the board of trade. So I guess everything old is new again at the end of the day. How is that component of all the business shaping up?
Well, it comes and goes, right? And I think at the end of the day, how much business gets traded upstairs, how much gets traded electronically, how much gets crossed. It depends upon the ebbs and flows of the risk appetites of the investment banks and the large brokers. So at the end of the day, they may want to take on their clients' trades in certain environments, and other environments they might just want to pass it through and use an electronic trading system. So for us as business managers, we just want to make sure whatever the client needs, that we're in the sphere of helping them compete. So we have clients who use our execution management system and then route it through Dash's electronic routers and algos. That same client may use our broker point network to send it to an IDB or to send it directly to the floor to either cross it themselves or have those guys find the other side. So, I think we've seen a little bit of ebbing and flowing there, really depending upon the risk appetite of the high touch marketplace.
If you like having the option, pun intended, of being able to offer your clients, they want to go fully electronic, you have that. They want to go the high touch route and maybe babysit the order a little bit, you can also offer them that. So it's more of having the option, pun intended, for them.
Yeah, the choices for options, you could even say.
Yeah.
So, and at the end of so we want to be in a business where whatever the client needs, that we have a solution that can help them. And that's why we've become a growing share of, as I mentioned before, electronically trading 15% of the OCC volume, but touching the rest of it through order management system and the broker point network.
Obviously, since the last time we had Dash on, the options industry has continued its path of fragmentation, up to about 16, I believe, exchanges now out there. Of course, Peter's last appearance was about smart order routing, so that level of fragmentation probably a good thing from your perspective, because people need smart routers when those kind of things come to pass. But what are your thoughts on what we're seeing right now out there in the options landscape? Market structure doesn't just pertain to equities. The options landscape obviously also pretty fraught with interesting challenges out there right now. What are your thoughts on the continued fragmentation out there? Is that maybe an opportunity for you guys? Does that excite you? Do you think maybe we've reached the point of it's starting to get a little bit dangerous? Where do you fall on that?
We're pro-competition, but we're also pro-transparency. And so we like competition. We think that we like when there's innovation. Now, I think so many exchanges with so few exchange operating companies may not be optimal. But, we welcome new marketplaces so long as they're driving solutions that help our clients. And, as I said before, we are market structure experts. We help clients drive the outcomes that they want, predicated on the complex market structure. But we also think it's been good for our clients. If you look at the all-in cost of trading, what we really help our clients manage is what we refer to as the total cost of trading. So that's both the implicit cost, their price performance, whether it's spread capture or however liquidity capture, however you want to define it, and explicit costs, getting rebates, getting lower prices. So the existence of so many different exchange platforms and helps, it does help us find really good solutions for our clients, and we welcome it. At the same time, we're not sure, and if you go to the equities market structure, for example, we're not sure whether protected markets are necessary now that there is so much transparency. So while generally, we as an industry participants, we like freedom, we like choice, we also do think it's important that the regulators drive transparency. So if you look at CAT and you look at the 606 regulation, I think there's enough transparency out there and that really enables the end user to see where their order is going, that we might, I think the concept of having protected markets may be a little bit dated.
The other contentious issue on that fragmentation point is auctions. Some people think they're the best thing that ever happened to the options market. Others think, it's a way of further fragmenting and disguising what liquidity is out there. Where do you fall on that issue? You think maybe we've gone too far with auctions, or somewhere in the middle? Where do you fall on the whole contentious auction issue?
I would align it to my previous comments, as we like different solutions. We at Dash have the ability to adapt to all the different options that are out there, or choices, we should probably say, when discussing options. So for us, we were able to utilize the auctions that are out there to our advantage, because at the end of the day, options are a little bit different than other asset classes. I spent my life in equities, and the other side of the trade is always potentially there. And options, sometimes the liquidity needs to be called. There's different strikes. There's different ways to put on your position. So I think auctions are a way to find liquidity and bring liquidity to bear, and to force competition.
Speaking of contentious issues, you mentioned the CAT. That's also a heated one. Depends where you sit in the space of how contentious it is. I had Jim from STA not too long ago. He said, it's going to get really contentious when people start getting their CAT bills in the mail pretty soon. That's going to be an interesting time. We had the thesis guys on back when they were still running the CAT as well. I'm curious, what are your thoughts on how we're progressing on that front? Do you think we're going to be able to make all the timelines? And do you agree with Jim over there from STA? Once the bills start flying, then all of a sudden people are going to start paying a lot more attention to how this project unfolds.
Well, look, I think it's always we as industry participants are faced with a lot of regulation, especially in the last 10 years, and we're faced with a lot of cost of conforming to regulation. I think CAT is probably a worthwhile regulation that I think we certainly support its existence, and at the end of the day, regulation always costs, and we could always just hope that our SROs appeal to the government and make sure that whenever regulation is put in place, that the cost to the industry of compliance is taken into account. And certainly there's always going to be frustration with legislation that requires new conformity and new builds. And I think CAT's probably one that's worthwhile. And, at the end of the day, we all have to conform to it. And I think we're probably closer than people think. I think different workflows, which were more electronic before CAT, were probably more advanced in terms of keeping timestamps and some of the things that require people to are required of CAT compliance. I think the upstream high touch flows were often not captured, but at the end of the day probably should be captured. Data surrounding where a stock was when a voice order came in. Those are critical elements of best execution that are in a perfect world probably best tracked.
Well, Glenn, glad we get you on to have a little bit of a look back, a catch-up, if you will, on all things going on at Dash. A pretty far-reaching conversation, but that said, if there's something you thought, hey, I wouldn't mind mentioning this, or perhaps you want to leave our audience with a little bit of a hint, a little bit of a tease of what's coming down the pike from you guys over there at Dash. Maybe more acquisitions, who knows? Now is the time, sir. The floor is yours.
As we go forward, I think Dash is looking to solve more problems for clients. I think that's the easiest way to put it. So wherever there's complicated market structures which require the kind of solutions Dash can provide, as we traditionally have in options, we're interested in moving into those areas. And when as the Chief Growth Officer, it's my responsibility to lead the management team towards other business lines. We have a fantastic business in options. We have an opportunity to really continue to grow it. The large banks out there are really coming to the realization that they can't build every bit of technology that they want, and that you really need to focus their resources where they add alpha. And I think what we're expecting to see is a couple things. Is we really expect to see more large banks going to outsourcing, and going to specialists and experts like ourselves. And I also think you'll see more of the buy side trading options as well. I think you'll see traditional investment management community in their search for alpha look to options, and I think you'll see retail investors do so as well. So we're really pleased with the size of the market in 2018 and how with less volatility it's held its own pretty reasonable in 2019. So we're very optimistic about the future in options and our ability to provide solutions to banks and directly to the buy side. And we're also optimistic that our solutions and options can find real value to clients in other asset classes such as equities now. But I think someday you could see Dash solutions in things like fixed income and FX.
Well, Glenn, glad we can get you on. I'll look forward to seeing how all these initiatives, eRoom, CAT, all these initiatives, how they unfold in the marketplace in the coming months.
Thank you very much.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.